Hi everybody, we are looking at GameStop once again, and we have some pretty crazy information coming out from some very smart apes with their DD, showing some more tricks that the hedge funds are using to stop the margin call, to slow it down, and to prevent, well, not to prevent the moas, but to definitely delay it, to keep kicking the can down the road. So some very telling information I'm going to be going through later on in the video. But first, I just want to say once again, guys, you showed me a lot of love in the previous video. I'm really appreciating it. I'm going to keep on bringing out these videos because you guys love them and I love making them, and I love spreading the word about GameStop and what's happening. So thanks again. Thanks for the likes. Honestly, the support's been really amazing. So let's have a look at the GameStop price for today. So you can see currently it is down 2% on the day. It is at $198.50. The high was at $204 a share and even was as low as 193. So it has been up or down pretty crazy today for the start of the trading week. But we're not here to go through a technical analysis. We're here to go through these two posts here. So Peekaboo, well, this is from a user called What Can I Make Today, and it's on Reddit. This was yesterday, and it's Peekaboo, I see you, 79 million hidden shorts. So we'll just go through the too long didn't read here, because I would recommend going through these posts in a bit more detail, but we're just going to keep it high level, touch upon the key points, and then you can go read this in your own time. So too long didn't read. I found 79 million can kick shares in January 2019 using the married put approach. We can see that those cans have been kicked 1, 2, 3, 6, 12 months and 24 months from January 2021 with various option expirations. So you can see here these are very, very low put options in terms of a strike price, and these are the expiries. So you can see there is some in February with a $1 put, 50 cents in April, 50 cents in July, 50 cents in January, and $2 in January 2023. Now, if you look at the amount of these shares are, these are the amount of put options, and they total up to 323,000, which a put option is 100 shares, which would be the total of around 32 million shares that are kicked down the road. Then if this includes share prices that are $20 a share, it is a lot higher, and according to this user here, that is a total of 79 million. So what is a put option? Well, a put option is a contract that gives the owner of the option the right, but not the obligation, to sell a underlying security at a predetermined amount of an underlying security at a predetermined price within a time frame. And this is called the strike price, which you just heard me mention before. So let's just go to an example here at the bottom. Example of a put option. So say the SPY is currently trading at $277 a share, which it's most certainly not. This is a bit old, with a strike price of 260. We won't be getting into the premiums here because it's not relevant for what we're doing in game. But say it was at $277 a share and the strike price expiring in 1 month is 260. So what the put option buyer is betting is that the price of SPY will drop below 260. Therefore, they can buy it from the market and sell it back to them at a profit. So hopefully that has made a lot of sense here. But if we go into what actually is happening with GameStop, these put options here are $1.50 puts. So what they are saying here, well, let's just go out to the largest one, January 2020. 50 cents put. There are 100,000 options out there, which is 10 million shares. What this is saying is by January 2022, they're expecting the price of GameStop to be less than 50 cents a share, so that they can sell, they can buy the shares from the market at less than 50 cents a share and then exercise their put option to force someone to buy it at 50 cents a share. GameStop, as we just saw previously, is at $198 a share currently, and even at its lowest point in the last 12 months was still $4 a share, and that was with heavy short pressure and people driving down the stock. So it is extremely unlikely, well, not impossible because anything's possible in this world, but extremely unlikely that GameStop would be 50 cents a share, because the company is doing a lot better in terms of the actual balance sheet and finances than they were during the pandemic. They have a lot of cash on hand. I think 2 billion in free cash flow. The company has a lot of forward movement in terms of what they're doing for cloud, for becoming a gaming hub, whether online or brick and mortar. And the company seems to be doing a lot better. So to say that it's at $50, 50 cents a share is pretty crazy. Um, so why are they doing this? Well, because if you have a put option in the future for 50 cents, according to the SEC or what you need to claim, then you have access to those shares in the future. Or you can say, well, I've got one option which gives me the right to have 100 shares. Yes, you do, but it's 50 cents a share. Probably not going to happen. So that is what they're doing. And if we just go to this post here, which is 103 million hidden shorts. So once again, this is a continuation of the previous post, which has options that are worthless by us, the deepest out of the money puts that expand the strikes of less than $5 a share. So once again, these total up to around a million options, which is 103 million shares, which could be, these are just worthless puts that will expire out of the money, and they'll be expire worthless. There'll be no shares traded because GameStop most likely will not under 50 cents, will not likely be most under $1 or even $2, because GameStop as a company is in a better place than it was when it was at $4 a share, and a lot of people said it was a dead stock. So these are going to expire out of the money, they're going to expire worthless, but in terms of hedge funds doing margin call and things like that, avoiding margin call, then they can hide and push the can down, kick the can down the road using these option contracts. These are worthless options. I could say that GameStop is going to go to $2 a share. $2 a share, GameStop hasn't been at $2 a share within this year. The lowest price it was this year was $3.77, and that was long before the beginning of the short squeeze and the MOAS. So it is pretty darn safe bet that a struggling company during the height of a pandemic where all their shops were shut, GameStop was deemed a dead stock and was still valued at $3.77 a share, that in this time next year is going to be now worth 50 cents a share, or less than 50 cents a share actually. So it just shows that these hedge funds are using more tricks to keep kicking the can down the road. Right guys, bit of a longer one today, a bit rambly, but I hope you enjoyed it. I will be posting more videos as and when, and I just want to say thanks for the love once again. It's been really great to see you guys loving the videos, so I will catch you guys next time.